Hi, welcome to the market view for the 28th of February 2014, last day of February. You join me at the or in the middle of a trade. This morning the market's already moving higher. It's gone through the entry point and is heading up towards the resistance one there. Whilst that's in progress, let's just have a look at the daily chart. I always like to have a look at the background of the market, see what we're up against, and we can see the market's starting to make these sort of rising lows, as they're called. There was the odd day here where the market went back down and retested the sort of 166 area, 165.60 area, 166.50 I should say, which is this one, and 166 which is this area. So after trading in this range, the market's managed to now break out and start to move higher. We have a problem though. If we just have a look at just go to markup and lines there, just get a horizontal line, you can see across here we've got this resistance area here, which the market needs to actually close through. So it's a matter of the market having to drive through this area and on higher volume, of course, to move to the upside. So let's just have a look at this in more detail. Let's have a look at the extension tool here. Let's just get some sort of a price of the resistance there. So we've got 167.32 is the first upside resistance. So in the daily chart we have a look and we've got 167.25, which is the scalp. So it appears that the resistance comes after the market's hit the scalp in the 30 minutes. So if the market continues higher, then we've got the psychological level here of let's have a look, 167.50 for this area, and then of course as we go higher we've got oops, let me just remove that and cancel that there. Let me just get rid of this line here as well. There we go. So then we've got the high on here, and I just want to go to navigation. I'm just going to bring this down a bit so we can see that a bit more clearly there. So then we've got 168.21 is the high that the market's been to of late. So we've got this sort of down upward motion as well, and when we get this type of activity we can use what's known as the Fibonacci. I'm not going to go into detail about who Fibonacci is or how it's calculated, but more why I actually use it. So again, I'm going back to markup. I'm just going to get the extend right. It says fib retracement there, and it's always a good idea to measure how much momentum a market's got as it goes back to a previous high or down to a previous low. So the basics are that the market generally traces between 38, 50, 62 or 76% of its previous move, and the previous move is the recent high down to the recent low, because the market's left this low point behind and is now starting to move higher. We've looked at the horizontal resistance, which we see there, but should the market break through this and through the 167.50 area, which is just above there, that grey line there, then we want to know how much momentum the market's actually got. We can do this by clicking on the fib retracement tool. Just left click on the bar that has the high and then the one for the low, and then draw this in. Now interestingly enough, we see that the 167.32 is also the 62, so quite a resistance area. So when I'm in the trade, i.e. the 30 minute, I can see that you know, there's a possibility I'm going to have some sort of resistance at this 167.32 area. So there's nothing that's showing on here, but because I'm looking at the bigger time frame, which is the daily, I can see this sort of resistance area. And then we've got the 167.64 area as well, which could cause us some grief as well. So it's a case of having to make a decision if the market hits the scalp to move the stop to break even and hope that the market continues to move higher, or take the profits off the table. It's as simple as that. So there's the sort of bigger picture of what the market could do today, but you've got this resistance here, which also happens to be a 62% retracement area, which is adding more to the resistance, and it will require prices to drive through with increased volume in order to do this. And then after that we've got this area here, which is the 167.50 and then the 167.64. So just keep those in mind should the market continue to move higher here. Of course, it's got to get through the 167.20 area first. I think that's 167.20, yeah, which happens to be the resistance one there as well. Let's have a quick look at the news before we conclude and see what's going to be released today. Looks like we've got quite a few things. The medium impact news items I'm not too concerned about. We've got the Euro CPI flash at 10 AM and pending home sales in the US this afternoon. Nothing from the UK, and there's a couple of members of the FOMC that are actually going to speak as well. And then Carney's going to speak at 3:30 this afternoon as well. So keep this one in mind. No doubt making a U-turn and backtracking on some of the policy that he's made in August when he came to take up the position of BOE. So let's see what happens then, but just keep in mind Carney speaking at 3:30 this afternoon, no doubt wanting to buoy the market up for the politicians as there's an election next year, and making out everything's fine. So keep this in mind. I will see you in Monday's edition of the Market View. Have a great weekend. Thank you for your support, and as ever, thanks for watching.